Ever pondered which company reigns supreme in the investment world? BlackRock, Vanguard, or State Street? These three titans of the finance industry each bring a unique set of strengths and strategies to the table, making them the go-to choices for investors worldwide. BlackRock, known for its innovative approach and wide-ranging investment options, has a reputation for being a trailblazer in the industry. Vanguard, on the other hand, is lauded for its customer-centric approach and commitment to low-cost investing. State Street, the oldest of the three, stands tall with its rich history and robust suite of services. Understanding the ins and outs of these financial behemoths is crucial in navigating the complex world of investing. It's about more than just the numbers. It's about appreciating the ethos and approach of these companies and how they can align with your financial goals. Today, we dive deep into the specifics of BlackRock, Vanguard, and State Street to help you make informed investment decisions. Let's kick things off with BlackRock, the world's largest asset manager. Born in the late 80s, BlackRock started as a small investment bank in New York with a simple yet effective philosophy: put the client's needs first. This client-centric approach has been key to BlackRock's growth, propelling it to the top of the asset management industry. Today, BlackRock manages over $7 trillion in assets, a testament to the trust that institutions, intermediaries, and individuals around the world place in it. BlackRock's investment philosophy revolves around the belief that financial security is a fundamental right. BlackRock aims to aid investors in achieving this security by providing them with a wide range of investment solutions. These solutions span a broad spectrum, from equities to fixed income, alternatives to multi-asset strategies, and more. A key offering from BlackRock is its iShares exchange-traded funds, or ETFs. iShares is the largest provider of ETFs globally, a testament to BlackRock's innovation and expertise. These ETFs allow investors to gain exposure to various asset classes, sectors, and geographical regions, providing them with a simple, cost-effective, and flexible way to diversify their portfolios. However, with great size comes potential weaknesses. BlackRock's vast scale could make it more susceptible to systemic risks. Additionally, while its diverse offerings cater to a wide range of investor needs, they could also make the firm's operations complex and difficult to manage. But let's not forget BlackRock's strengths. Its size gives it significant economies of scale, allowing it to offer lower fees compared to many of its competitors. Moreover, its robust risk management framework, honed over decades, helps mitigate potential risks. In conclusion, BlackRock's commitment to its clients, its innovative offerings, and its ability to manage risk have solidified its position as a leader in the asset management industry. However, it's not without its potential pitfalls, and it's essential to consider these when evaluating BlackRock as an investment option. BlackRock's scale and diversity of offerings make it a standout, but let's see how it stacks up against Vanguard and State Street. Scene script. Next up, we have Vanguard, known for its low-cost mutual funds and ETFs. Vanguard has a rich history. Founded in 1975 by John C. Bogle, it was born out of a desire to serve the investor, not the investment. Bogle's philosophy was simple: keep costs low, focus on the long term, and let the magic of compounding do the work. This philosophy has shaped Vanguard into a global investment powerhouse, managing trillions of dollars in assets. Vanguard's investment philosophy is rooted in passive investing. Rather than trying to beat the market, Vanguard funds aim to mirror it. This strategy, known as index investing, keeps costs low and takes the guesswork out of investing. It's about consistency and patience, not timing the market or chasing the next big thing. Vanguard's key offerings are its low-cost mutual funds and ETFs. The company offers hundreds of funds covering a wide range of sectors, asset classes, and investment strategies. Whether you're a risk-averse investor looking for stable income or a risk-taker in search of high growth, Vanguard has a fund for you. But what really sets Vanguard apart is its unique ownership structure. Unlike most investment firms, Vanguard is owned by its fund shareholders. This means Vanguard's interests are aligned with its investors. It's not about maximizing profits for some distant shareholders. It's about delivering value to the people who invest in Vanguard funds. Now, Vanguard isn't without its potential shortcomings. Its focus on passive investing means it may not capture the high returns that active managers can in good times. And while its low-cost approach is generally a strength, some investors may find Vanguard's customer service lacking compared to firms with higher fees. However, it's important to remember that investing is a long-term game. And in the long run, Vanguard's low-cost patient approach has proven to be a winning strategy. Vanguard's low-cost approach has revolutionized the investment industry. But how does it compare to BlackRock and State Street? Let's find out. Last but not least, we have State Street, a key player in the world of asset management and services. Tracing its roots back to the late 18th century, State Street Corporation has had a long and storied history. It was originally founded as Union Bank in Boston, Massachusetts in 1792. It wasn't until the late 19th century that the institution took on the name State Street. Over the centuries, State Street has become a global powerhouse in the financial industry, with operations in more than 100 countries. Let's talk about State Street's investment philosophy. State Street believes in investing with purpose. It aims to make a measurable difference not just in terms of financial returns, but also in terms of social and environmental impact. It's not just about the bottom line for State Street, it's about creating a better, more sustainable world. State Street offers a wide array of services, including asset management, custodian banking, and investment servicing. Its asset management arm, State Street Global Advisors, is one of the world's largest asset managers, with trillions of dollars under management. It is renowned for its passive investment strategies, particularly its index and ETF offerings. But it's not all rosy. State Street's strength in institutional services also presents a potential weakness. Its focus on institutional clients means it lacks the retail presence of its rivals, BlackRock and Vanguard. This could limit its growth potential in an increasingly retail-focused investment world. Moreover, its heavy reliance on passive investment strategies could expose it to risks in volatile market conditions. Nonetheless, State Street's strengths are undeniable. Its long history, global presence, and commitment to sustainable investing set it apart. Its expertise in institutional services and passive investing strategies also make it a formidable player in the asset management industry. State Street's focus on institutional services sets it apart. But is it enough to outshine BlackRock and Vanguard? Let's delve deeper. Now that we've covered the basics of each company, let's put them side by side. Diving into the world of investment offerings, each company presents a diverse range of options. BlackRock, known for its iShares ETFs, offers a broad spectrum of investment avenues. Yet, Vanguard's low-cost index funds and ETFs have made it a household name among passive investors. And State Street, while not as well known to the general public, is a significant player in the institutional space, with its SPDR ETFs being a popular choice. Costs are a crucial factor when choosing an investment firm. Vanguard has built its reputation on low-cost funds, making it an attractive choice for cost-conscious investors. BlackRock, while slightly more expensive, offers a wider range of investment options. State Street, on the other hand, offers competitive pricing, landing somewhere in the middle of the pack. When it comes to performance, it's a tight race. Each company has funds that have outperformed the market in various categories. However, it's essential to remember that past performance is not indicative of future results. Thus, while BlackRock's iShares, Vanguard's index funds, and State Street's SPDR ETFs have all had their moments of glory, future performance is always uncertain. Client services are the final piece of the puzzle. Here, Vanguard shines with its client-oriented approach. The firm is known for its excellent customer service and extensive educational resources. BlackRock, on the other hand, is more institutionally focused, but still provides robust support for individual investors. State Street, while primarily serving institutional clients, has made strides in improving its services for individual investors. In the end, the choice between BlackRock, Vanguard, and State Street depends on your specific needs and objectives as an investor. Are you seeking a wide array of investment options, low-cost funds, a proven track record, or top-notch client services? Your answer will guide your decision. As we can see, each company has its unique strengths and weaknesses, catering to different types of investors. To wrap things up, remember that the best investment company for you depends on your specific needs and goals. We've peeled back the layers on BlackRock, Vanguard, and State Street, three giants in the financial world, each with their unique strengths. BlackRock, with its diverse portfolio offerings, could be your go-to if you're looking for a range of investment options. Vanguard, on the other hand, is a beacon of affordability, making it a perfect match for those who are budget-conscious but still want to make their money work for them. And let's not forget about State Street, a titan in institutional investing. If you're an institution looking to invest, State Street's expertise in this area is nearly unparalleled. Each of these companies has something different to offer, and your task is to determine which one aligns best with your personal or institutional financial goals. Whether it's BlackRock's diversity, Vanguard's affordability, or State Street's institutional focus, the choice is yours. Happy investing!